Alright, what's going on, guys? We got a market recap for, what is today? Tuesday. Yeah, Tuesday, August 25th. Market recap, no trades for me this morning. You can see I still haven't bought the new accounts yet because I literally logged into the charts this morning and was pretty much like, yeah, there's a very, very, very low probability that I'm going to be taking a trade today. And we'll get into why. So I'll make this one short and quick and easy and simple. But this is some text that I wrote out in class as I was sitting there, towards the end of the AM session, knowing that a trade isn't going to play out. And we essentially had this failure swing higher to these two buy side, this set of buy side liquidity, and we'll get into why that was a failure swing. But coming into the morning, same scenario as yesterday. We are within this big daily gap. The next target lower would be the start of this smaller daily gap, as well as equilibrium of this entire price range after reacting out of this monthly fair value gap. Also keeping in mind that ES and NQ, there's an SMT at all-time highs. ES has already taken its all-time high. So keeping that in mind, expecting to see a deeper retrace because of this internal price action here. We have continued past this original internal low within the fair value gap, letting me know that we're going to dig deeper into it. I also know that we're digging deeper into it because if we zoom in, what are we doing? We're putting in lower highs, lower lows, lower highs, lower lows. So until this, it's as simple as until this higher time frame structure breaks back to the upside, I'm going to continue to have my daily bias be bearish. It's really as simple as that. It's not getting too cute, and it's sticking with what in this context, the 4-hour and the 1-hour structure are my high time frames, sticking to what the higher time frame structure is telling me within this daily gap, because within the daily gap we could theoretically be going up higher, or dig deeper down into it. Like I said, we still have targets down here to dig deeper down into. So I'm zoomed in terms of going from the daily to the 4-hour to the 1-hour. I'm zoomed in to see what are we actually going to do. And right now we have higher highs, or lower highs and lower lows. So until we break that structure, targeting these highs isn't really the highest probability thing to do. Ideally, in order to target higher, we would break structure back to the upside above these swing highs. Then let's say I would have a lot of confidence in targeting the next draw on liquidity, which would be this swing high. It's also the start of a bearish daily imbalance, but that would be the first target in terms of heading back higher on the higher time frames. I hope that makes sense. That's why I was very cautious, and it all comes down to having an A+ draw on liquidity at the end of the day. That's what creates A+ trades, is literally, does the market actually have to go to your high time frame drawn liquidity? It's easy to get sucked up and mark out every single swing high and swing low that you see on the charts to try to justify taking a trade each and every single morning. But the reality is, there's not going to be a high quality trade each and every single morning. There's not going to be a high quality draw on liquidity to target each and every morning. So that is 80 to 90% of it is actually identifying a high probability A+ draw on liquidity that the market has to go to. The market does not have to go here to these highs. I don't have confidence until we break structure higher. So zooming in, if you were to take a trade to these highs up here, what would I need to see? The market opens, 9:30 open is right here. I want to have confidence in even trying to target these highs until we close above the internal swing high that was put in pre-market. You can see I have it marked out by a dashed line. Let's say we come up here, displace higher, we get a good 15-minute candle close, pull back to a 15-minute for value gap. Maybe you can take an aggressive entry here, something like this. After we get the confirmation move that we're going and continuing past these internal highs. But that is not the highest probability trade, because of all the reasons that I just mentioned. We also had 4-hour gaps down here. So I'm kind of expecting, I said this right here, the failure swing to these highs off of market open was because of the bearish 4-hour, 1-hour structure. You're going against the higher time frame structure trying to target these highs right now. Would need a market structure shift higher above these swing highs to have confidence in targeting draws higher. Right now, all the highs that are being put in right here, these are, for the time being, they are all protected because the higher time frame trend right now is a downtrend. Lower highs, lower lows. And we still have high time frame draws and liquidity lower. We had previous day low from yesterday. We have this, like I said, this daily BISI down here, and we also have equilibrium of the daily range lying right here. There's reasons to continue lower. So we were kind of in no man's land between these highs and between these potential lows to target. And we ended up opening a 4-hour gap overnight. And so ideally targeting lower, you'd want to run through this 4-hour gap and have confirmation of that. Also, based on where we opened up the market, the previous day low was almost 400 points away. So for all those reasons combined, just coming in and looking at the higher time frame structure before the market opened, when I'm coming in to chart out and see what the market is offering for the morning, I can already tell today is low probability that a high quality trade is going to play out. And those are all the reasons right there why I stayed out of it. And I think if you don't have a profitable mindset and a profitable mentality when coming into the market, it's going to be really hard on days like this to just stay out of and not participate. That's the biggest thing is, are you able to not participate on lower probability days? Today, coming into the morning, because of everything that I just said, all this analysis, I identified it as a lower probability day because of the lack of A+ draw and liquidity. So on days like today, are you able to be content with not taking a trade? Literally, on days like today, sometimes you can just close out. You can lock yourself out as soon as you log onto the charts and just close your laptop for the day and understand that there's 5 days a week of the market. There's always next week and the next week and the next week. The market isn't going anywhere. It's not going anywhere. And likely you're going to still be trading 2 years, 3 years, 4 years, 5 years down the line. Like, you're going to be on the market. Like, when good price action and good opportunity is actually presented to you, you're going to be on the charts. It's just like, are you actually going to be able to take advantage of that high quality opportunity on funded accounts that are ideally passed because you were patient enough to not force anything on lower probability days? That's the biggest thing. So yeah, no trades today, no trades yesterday, Monday, Tuesday. It's also no news to start the week, dude. Also realizing that if we go to Forex Factory right here, I guess there was orange folder consumer confidence. No news Monday, really. Basically, no news Tuesday. We have high impact news pre-market tomorrow that should bring some good volatility into the market, good volume. And we have higher impact news later on in the week. So a little bit of a slow start to the week, but that's to be expected with no high impact news Monday, Tuesday to start the trading week. And then we have PCE on Wednesday, unemployment claims on Thursday, and we have Fed chairs, consumer sentiment speaking on Friday. So the higher impact news, we also have a lot of company earnings are coming out on Wednesday, Thursday of this week. So it just makes sense to have a slower start to the week. If you can combine all those factors, combined with the higher time frame structure, like I mentioned in yesterday's video, you can have the discipline and the knowledge and the understanding to not take a trade, understanding that it's going to take a second for price action to develop based on where we are in price. So we'll see if we want to end up digging deeper throughout the rest of the week to this lower BISI. It would make sense because of equilibrium as well. And that's going to be my bias until we start to run through bullish gaps, until we start to close above swing highs. Let's say we put in the swing high here, coming into the market, if we close above and break structure back to the upside, okay, bet I can target this high. I can target this high and this daily fair value gap. I can target, I can have this as my external target. But until then, my bias is going to be that I want to see us dig deeper. I want to see how we're going to hold this 4 hour. If we close through it, it makes the bias incredibly simple, digging deeper into this gap. If we hold it, you can potentially take a trade to this swing high before we break structure, but realizing that it's a lower probability until we break structure back to the upside. We'll see what happens tomorrow, going into the rest of the week. No trades today. Staying patient, staying disciplined, all that good stuff. Who cares if I'm on evals right now? Because trading is trading, and at the end of the day, they're understanding that they're designed to just get in your head. They're designed to make you want to rush the process. They're designed to, like, oh, I want an eval, I want to rush the process, I want to pass it. I force a trade on a low probability day like today. Boom. That's assuming I'm copy trading 3 accounts at the same time. That's $300 down the drain on one trading day because I don't have the discipline to actually sit back and wait for a good opportunity. It doesn't matter if you're on an eval. If you're not patient on evals, all that's going to do is cause you to have more business expenses so that when you finally do get to the XFA, when you finally do get the payout, your net profit is a lot less than it should be. So, patience, discipline, it all pays off in the long run. That's where I'm at. No trades today. Didn't see anything to execute on. And yeah, man, daily uploads. I will see y'all tomorrow in tomorrow's market recap. Peace.